Welcome to Tradespin and Yellow Tunnel. My name is Dr. Carpel. I'm CEO and founder of Tradespin and Yellow Tunnel. And today we're going to have our live trading room open to trade stock and options using our technology. For those of you who are new, welcome. Welcome to Tradier Hub. Appreciate the opportunity. And today we're going to continue talking about current market condition, talk about earnings, Netflix announcing earnings after the close, and the current pullback, and see if it makes sense to use it as an opportunity to go long, or if this makes more sense to hedge. Go to webinar, guys. Thank you very much for joining. Let me know if you have any questions. Alon, Cecile, Larissa, Mark, Steve, welcome. This is my brief bio. I think the main difference between Tradespin and Yellow Tunnel and other services out there that we are invested into AI. We have a team of financial engineers that are building models and providing signals, short-term, medium-term signals in the market for stock and ETFs. And then I'm using these signals to trade in live trading environment, and that's what you see right now. I'm going to go through specific trade ideas, so very important to look at the disclosures. Trading stock and options above risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered as FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult a financial advisor prior to making any trading decisions. Fred, welcome. How are you? You can always pause the screen if you need more time to read the disclosures. All right, so let's take a look at the market. We had a pullback in the past couple of days, so we'll see how. Let's look at the first interest rates. So 10-year yield continues to trade lower after the CPI data. We're still below 420, not a lot of bounce back in the yield. Short term, it's oversold. Medium term, long term, we do see lower highs and lower lows, trending lower. Still trading below this support level. So yield is down, and dollar also pulled back significantly. It's bouncing back today, but it did break through May and June lows for the past few sessions, and basically trying to fight for the 50-day and 200-day moving average. Yesterday we had a sharp rotation away from the semiconductors and into small cap stocks. So small caps, we have a vertical rally in the past week, broke through the important overhead resistance to 10, and today we have a sell-off across all asset classes. So yesterday there was rotation into the value stocks. Today, value is also pulling back, small caps are pulling back, partially due to options expiration, right? Yesterday we had a VIX expiring, and tomorrow we have monthly expiration, and that causes market makers to adjust their positions, right? So if you look at, let's look at the spiders. So right now I'm looking at the dealer positioning for spiders. We've been looking at the gamma exposure, right? If the gamma exposure, if the dealers are long gamma, then usually it's a put skew, and they have to buy stock if it drops to a certain level, or if they're short volatility, then the dealers are forced to buy the stock, right, if it reaches the upper range. So let's see where the high open interest right now, and I think that's where the main support and resistance levels we can find. So let's take a look. So let's see. So let's see the vote, not yet. Okay. All right, so now that we loaded, let's look at, so we have tomorrow, July 20, the July options expire, and you can see there were still a relatively large position at 550 level, so 545 level, 545, 550 level. So this is where the market is positioned right now going into tomorrow's expiration. And if you look at the stock forecast toolbox, for today, prediction was also that market on the downside could reach 550 level. So model doing a good job predicting support. So for today's support is 550, overhead resistance is 557. We already close to 550 level. We have another 50 minutes left. Let's look at the spiders. So this is a neural network model providing predictions for today. Spiders right at the 550 level, basically retesting the breakout of June highs. So very important support level, and at least as of right now, well positioned into expiration tomorrow. So if you remove the 0 days till expiration and look beyond, and this is why it could cause more, that we are experiencing some of the volatility. Let's look in August expiration. And let's look at the next Friday, which is the 26th. Significant support outside of the 550 is 530. So the next level is 530 and 540. There's a little position at 540 August expiration. Let's see, let's look at September. So for the most part, it's 540, right? A little bit 540, maybe 20,000 Vanna, and then 530. So 540 and 530 are the next level based on positioning, and it makes sense, right? So if the 550 doesn't hold, if bulls are unable to hold on to 550, let's, into the next week, then the next level will be 540. And 540 is the 50-day moving average. This is where people are buying a lot of put buying, and that would be the level that I would watch for. I mean, obviously we had a gap yesterday and continuation today. That's usually a bearish price pattern. Friday, Monday would be important, right? Do we have a bounce back from the 540 level, or do bears push the market to the 50-day moving average? So that's spider's position. Let's look at the QQQ. QQQ is leading the market to the downside. So rotation out of the mega cap technology stocks. We had a sharp pullback yesterday, continuation today. QQQ basically retesting 50-day moving average. So 470 is important support for QQQ. And stocks like NVIDIA, after yesterday's pullback, I think already breaking through the neckline, right? So you do have July, June lows in NVIDIA, and it's retesting 50-day moving average, right? So this supported 50-day moving average is well positioned right now, and that's what I would look at as a main support level. You do see that NVIDIA is turning positive, right, up 2%, so that's bullish for the market. So we don't have indiscriminate sell-off. There's still, let's see. NVIDIA is up for the day, which is positive. And let's look at the watch list. Home builders are up after DHI earnings. VIX jumped to 16. We've seen that price action during the OPEX expiration when July positions are being removed and people reposition. You do see new demand for the puts, and VIX is at sharp rally at VIX, actually at May high or higher. Let's see. Industrials are pulling back. So we do have a pullback in industrials. Sharp pullback in transportation, retail sectors. So it looks like outside of NVIDIA, everything for the most part are in red, both value and growth names. So airlines, Germany, small caps also pulling back. Biotech, energies slightly positive. Nvidia and ExxonMobil. So we do have energy, ExxonMobil, and with Nvidia still in positive territory. Let's see what else is positive outside of energy. So we talked about energy. So outside of energy, Meta is up 2.5% after sharp sell-off yesterday. So Meta already bouncing back, reaching 2 standard deviation. Pretty sharp pullback in Meta. JP Morgan today took a dive, down 3%, Goldman Sachs. So Tradier is up. That's about it. Right. So I think it makes sense to at least consider hedging. If you have a stock, maybe you can buy a put, mirrored put, or sell a call against it. But day one, day two, Friday close and Monday would be probably the most important. Usually, the rule is 2 to 3 days to wait for the confirmation for the trend change. But at this point, I think short term, probably 5. This overhead resistance is set at at all-time high, and we probably trading in consolidation. Any questions? All right, so let's see. So I did have a Dow Jones. This is at 16. Thank you, Fred. Partly is due to Apex expiration, partly due to bearish rhetoric from Trump and Biden in terms of China regulations and putting more tariffs on China. We did have a reversal in Taiwan Semiconductors announced earnings. For the most part, it was a positive earnings. The pre-market stock was up 3 to 4%, but it did reverse and traded as low as 164 on above average volume. So you still have a pretty sharp pressure to the downside. All right, so let's take a look in terms of positioning. Let's see which. So in theory, I think we could hold the 540 level, right? 540 level, or 530, right? That's the 50-day moving average. So that's another 2 to 3% to the downside. So let's go to Tradier and see where we can put a put spread. And see if we can do a quick spread in spiders or QQQ. QQQ. The first in spiders. Okay, so I'm gonna go into, now that July is done, almost done. We have August, maybe September. August, September should be a volatile time. I think it makes sense to start thinking about hedging. So we're already at 550 level. If that level doesn't hold, we're probably gonna go to 540 or 530. So let's see if we can do in the money spread. So you can buy. Let's look 550. Let's look at 560. Let's see. So 550. And sell 545. For 540. Let's see how much this spread will cost me. Right, so if I'm buying 550 put, one contract, I'm hedging myself 2% to the downside in case it gets maybe the steeper sell-off to 535. This would be $3.92. So I can change it to net debit of $3.90. So let's try to put that order in. And then let me know if you guys have any questions.
Lower. So you want to go okay. Yeah.
Spiders. Is vertical.
Yeah.
So hold on. Strike. 550, 535, 550. And we're going into September expiration. 550, 535 trading at $3.92 right now.
You wouldn't be selling any puts.
$3.92.
Yeah.
So now you buy the against it.
Okay, so just 1 second.
Right. Right. Yeah. I get what you're saying. I like that way of thinking.
Yeah. Because I can see something crazy like I love that.
But the bottom line is when you get a bid,
So buying 550, selling 535 put, risking $4 to hedge to maximum profit of $11.
Right.
Maybe increase it by trading at 396, 397.
Like a 55.95.
Okay. So I did get filled on Elite Trading Circle. So that would be one idea to hedge, right? You could be more aggressive and do the QQQ put spread if you think that value will outperform and small caps will outperform technology, or just spiders, right? So I bought it risking $4, $3.97, and maximum profit would be $15. It's a $15 spread. I'm long 550. I'm long 550 put and short 535 put. Let's see, I do need to change Netflix. $10. Netflix doing that. Okay. And then we did put a butterfly on Netflix. So on Netflix, the call spread got filled. 730, 735. Let's see, what is it trading right now? Should decrease in price, but the call spread I didn't. So I got filled on the call butterfly, but not on the put butterfly. So I'm still so now I'm long put butterfly on Netflix, 535, 555, 575. That's the $20 butterfly that we put on this morning. So now get filled and got filled on Netflix. Any questions? And also ExxonMobil got filled at 119.08, so I'm out of ExxonMobil. Out of ExxonMobil and out of Ford. Both stocks trades got filled. So if you look at the bar chart in terms of estimated move analysis, let's look at that expected move again. Let's type in Netflix. Yeah. So expected move according to the bar chart calculation is $77. Right? For the next week, for this week, it's 209%, $70. If you do option chain, just a different way to calculate the estimated move.
So no matter what, you don't say,
It's a mind. You're unwilling to look at the reality of the market. I say it. You're unwilling to look at the reality. The market is doing money. You think that, oh, I'm smarter than you think. This market has been glaring since this morning. It's been very obvious. This. Every time we are going, we just look it up.
I'm not sure if that's not loading, but let's see. A second while this page is loaded.
Yeah, I mean, this is.
if you get the load in semi
Really?
semi is a good computer.
So let's see, 642. So if you do the estimated move analysis, so I usually do at the money call spread. So you take 29 plus roughly 29, so $60. That's at the money straddle, and then you add a strangle, which is another $50. So now it's 110. So it has increased the estimated move. And in terms of open interest, we did look at Netflix, right? And open interest in terms of high concentration, right? So open interest 750 is the strike. So that's why I picked 750 strike, because if you have a positive surprise, it can move to 750. And if you have a negative surprise, then it can drop to 555 in terms of Netflix. So that's where I see Netflix trade based on the estimated move analysis. And it's already dropped below 50-day moving average. It's sitting at the April highs, the breakout. So tomorrow is very important. If it does break through this level, it could potentially revisit 200-day moving average. Estimated move is 10%, so 70, 80 points would take us to about 580, right? So that would be, I would say, one standard deviation move. But since the market is volatile and we have an expiration, you could expect that potentially, if this level doesn't hold, we could have the two standard deviation move where Netflix could be down to 5. Well, the worst case is 550, which would be what, 100. Well, yeah, $100 to the downside. So it could be a $550 stock tomorrow. It could be a $750 stock tomorrow. It depends on the earnings. Today, in terms of earnings announcement, the most important is probably Taiwan Semiconductor. And so far, it's kind of a continuation of yesterday's sell-off. Briefly breached 50-day moving average and now trading above that level. So the only positive news that I do see is NVIDIA. That NVIDIA is still positive and not breaking through the support. Right? So NVIDIA is still positive or turning positive and reaching 50-day moving average, kind of fighting for this June low level. Any questions on NVIDIA? VIX is at CKNI seems to be their best energy play. They just posted big earnings to KMI. So thank you, Bob. Let's look at KMI. Yeah, strong move on KMI after the earnings. We've seen continuation in ExxonMobil. A lot of it, again, if probability that Trump or we have a red wave increases, then you do see rotation into some of the energy names, right? And green energy is pulling back. Let's review other positions and see if we want to hedge anything else. So FXI, on long FXI, let's look at FXI. So we talked about additional tariffs imposed by either Biden or Trump administration. China did pull back, basically 50% retracement. Important support level. It hasn't broke this level. NVIDIA is turning positive. I think a lot of it has to do with monthly expiration. We'll see that sell-off will translate into the next week, but I'm watching the support level. If it does break through this level, then probably makes sense to exit FXI. General Electric, I do have earnings next week, and I have a spread that expires in August. So there's not much time left. The only good news is that General Electric is actually also turning positive, right, on a steep, on a sell-off day. So that indicates me that at least short-term, this 550 on spiders will hold, right? And we'll see next week if the market sells off. If we start posting new lows, or if the premium is, let's see how much is the premium, is down more than 50%, the debit price. So I put the General Electric trade for $3.34. It's trading at 270. So right now I'm down maybe 60, 70 cents. If I'm down half of that spread, then I would exit the position, or exit position before the earnings if you don't want to take risk of earnings. If you look at General Electric in terms of the estimated move analysis,
It's a recipe.
so General Electric down, estimated move for next week with the rising volatility is about 10%. So if you don't want to take that risk, then you would close the trade before the earnings. Somebody asked a question about high yield. So let's look at high yield, right? To see if there's any liquidity issues in high yield. High yield is still trading about 50-day moving average, continues to trade higher. It did pull back today, but no panic. And that's a good sign that the spread between the junk bonds yield and the treasuries are not widening, right? So you don't have any liquidity issues. Bitcoin also is able to jump above the breakout level, the breakdown level, 60,000. It is pulling back today, but it's fighting for the 50-day moving average. That's another positive sign in the market. Let's see. Yeah, that's about it. All right. So it looks like Spiders is fighting for the 550 level. That's the most important level that at least model predicted that it should hold. If it does hold, then in the next 10 days, the model basically sees that the lows are not much momentum, maybe 540, right? Maybe we can get to 540, but then still the rally recovers. So the trend hasn't changed short term. It's still in uptrend. All right, let's move on to the next trade. Google, right? Google also announcing earnings next week. Same strategy as General Electric. The difference here is a September position, so I still have a little bit more time. You do have a pretty sharp pullback. It's below 50-day moving average. It's below the breakout, the highs 178, 175. So let's look at the right now. Same idea. Bought at the Google spread for $3.20. Right, so I bought it for $3.20, and right now the spread is trading at $2.20. I'm down $1, but it is getting close to 50%. So I mean, I have a choice: either wait it goes to 0 or it goes back to 5 after the earnings, or exit out since now it's out of the money after, if it's down 50%. I'm gonna wait for 50% down. Short term, obviously, stocks are oversold. It's reaching support level. Nvidia turning positive. I do know that we have expiration tomorrow, which also could be volatility. And Monday, Tuesday, make a decision. If the market continues to pull back, then I think maybe this is a more significant pullback than as of right now. All right. Any questions? Has been moving higher, better than Schlumberger. Yeah, so Energy Name is going to start announcing earnings. We have Schlumberger announcing earnings, and then we have a Halliburton. Also reaching 50-day moving average. No, this is not the right Halliburton.
There's no risk, and if I'm right, I'm making up here.
Yeah, looks like Halliburton is doing a catch-up trade, fighting for the 50-day moving average as we're approaching the earnings announcement. Any questions? All right, let's keep going. We talked about Google. Small caps. So I'm long small caps. I think this breakout has been confirmed and expanding, but today we did have a sharp reversal. I mean, one day doesn't set the trend, and obviously the level to watch is the breakout, the 212 level. If the 212 level holds, then I think this is just a healthy pullback. If we drop below 212, then that would be my sign for an exit strategy. But for now, I'm still bullish on small caps. Well, today we have sell-off across the board, and looks like small caps are actually leading the market, along with regional banks, along with ARK Innovation leading the market to the downside. So that's small caps. Let's see, what else do we have? We talked about Netflix, JP Morgan, and LA Lilly. So I did close half of my JP Morgan position. We do have yield steepening, so that benefits the stocks like JP Morgan. It did pull back to the breakout level, right? The July highs after the earnings. Obviously, I would watch this level. If this level does drop, next level would be the breakout, the May high, which is around 205. So I would watch 200, 205. I think there's a lot of positioning again at 50-day moving average and a breakout somewhere between 200 and 205. Maybe as long as the sell-off doesn't accelerate, maybe that's where I can buy back my shares in JP Morgan. LA Lilly had a pretty sharp pullback. Maybe it's because healthcare stocks are reacting to the, but it's a pretty significant sell-off. So I am down. It's more than 10% pullback. Pretty small period of time, right? LA Lilly is down another 7% today, below 50-day moving average. So at this point, I mean, I do have a stock position, So I need to decide whether I want to hold this into Monday and Tuesday. It is trading below 50-day moving average. The volume is accelerating, so not sure if I have too much time to it. But it's pretty bearish price pattern. So let me just exit the LA Lily. Pretty sharp pullback. And this trade could continue, right? With the regulations and red sweep, potentially can have bearish effect on healthcare stocks. So let me exit out. Take a loss on LA Lily. Okay, so I'm out of LA Lily. It's an $840 stock, so you can't really buy puts to hedge, right? Because I only had 2 shares or 1 share when we originally placed the trade. So if you have 2 or 1 shares, buying 100 shares doesn't make sense. If you have a bigger portfolio and you can hedge it with a put or put spread, then it makes more sense. So that's LA Lily. We talked about Netflix and then silver. Right, we have silver position. Let's look at silver position. Let's look at silver position. So silver is also pulling back together with other sectors. It's fighting for the 50-day moving average. It's still trading above the April breakout. I mean, dollar is still low. 10-year yield is low. At least for now, I'm holding to the silver. I think silver, I would be a buyer in the pullback. And it's for now, it's kind of a still, I would consider healthy consolidation. I mean, it is down 3 days in a row, but it hasn't broken this level yet. So those are all the positions that I have. Any questions on Netflix earnings? So right now, a lot of it has to do with risk management, right? I would look at your portfolio. Usually what I do is I look at spiders, right? If spiders are down 1% and your portfolio is down 1%, then I think that's healthy pullback, that's fine. If spiders is down 1%, but your portfolio is down, let's say 2% or 3%, then I think you have too much exposure to the long side. And I would decrease the exposure to the long side, either buying puts to hedge or sell, buying put spread, like an example of the spiders. All right, buying 533, 535, 550, 535 put spread is one idea, or buying puts or selling calls, but hedging your portfolio. So that would be the most important part of this decision-making process. We do have SMH. SMH is actually turning positive. So for the day, so that's a good sign that between NVIDIA and semiconductors that we are, this could be just a short-term pullback and at least start the bottoming process sooner than later, right around 550 level. Any other questions? All right, it's 2:40. If there are no other questions, then I'd like to. But they broke out on earnings. Yeah, I haven't traded info, but that's all I have for today. Let's meet tomorrow again, Strategy Roundtable closing bell. And thank you very much. I'm Tradier and I'm going to webinar. Thank you guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.